We're going to compare the personal loans from Citibank and Wells Fargo. We've spent years in the lending industry and we track dozens of lenders. We want to break down these two lenders so that you can see which one might be better for your situation. And the first thing that we're going to look at is their loan amounts that they offer. Citibank offers loans as low as $2,000 and Wells Fargo will not lend less than $3,000. So if you're looking for just a little bit of money to cover an emergency, Citibank offers a little bit more flexibility on the low end. If you're looking for a more substantial amount of money, Citibank will lend as much as $30,000, but Wells Fargo will lend as much as $100,000. So Wells Fargo gets the win on the upper end of the scale. Citibank's terms go up to 5 years, while Wells Fargo will lend up to 7 years. 7 years seems like a long time to carry debt, but if you're borrowing as much as $100,000, you might need a term that long. Just remember, regardless of what your term is, make extra principal payments in the first year. That will save you a lot of money on interest in the long run. Now let's look at the costs of the two loans. Citibank's lowest APR is 10.49%, while Wells Fargo's is 7.49%. 7.49 is about as low as I've seen these days, so Wells Fargo gets highlighted. Citibank's maximum APR is 20.49%, which is pretty good actually. Wells Fargo's minimum is 23.24%. So Citibank gets credit for the lower top rate. Neither bank will charge an origination fee on their loans. They both offer some discounts too. Citibank offers a discount if you sign up for auto pay for your monthly payments. They also offer a discount to their priority customers. But I'm not sure whether that's valid for most people because to be a priority customer, you have to have a certain amount of money in a Citibank account. If you have that kind of money in an account, you probably don't need to take out a loan. Wells Fargo offers a relationship discount. That's just marketing speak for customers who are signed up for auto pay from a Wells Fargo account. Both Citibank and Wells Fargo lend to people with good to excellent credit. I would think you would struggle to get approved if your credit score was below 670, but that's just a guess. The only way to know for sure is for you to apply. Anyone can apply for a Citibank loan, but Wells Fargo restricts their personal loans to people who have had a Wells Fargo account for at least 12 months. No matter what else you like about them, that might eliminate them from consideration for you. Citibank won't accept a cosigner on their personal loans, but Wells Fargo will. A cosigner is someone who agrees to pay off your loan if you fail to repay it. If you can qualify for a loan that you need, there's little reason to entangle a loved one in the process. But if you have a spouse or a loved one that has a stronger credit profile than you do, adding them as a cosigner might make all the difference in getting the loan you need. It's good that Wells Fargo offers this option. If you want to use the personal loan to consolidate credit card balances or other loans, both of these companies will directly pay off your other debts for you with the proceeds of the loan. That's convenient, but there's also another reason why it's important. It shows that they know that the loan will replace other debts and not just stack on top of them. That means that the new loan shouldn't change your debt to income ratio, and that means that it should be easier for them to approve you. However, Citibank will not let you use the loan to consolidate any Citibank-issued credit card balances. Wells Fargo does not appear to have this limitation. If you are late on your payments, Citibank will not charge you a late fee, but Wells Fargo will. And in fact, they charge the highest late fee I've seen from any of the lenders that we track. Some lenders will charge other fees as well, like failed payment fees or paper check fees or things like that. Neither one of these companies have any of these fees. Citibank does have a curious policy that says that if you default on one of their loans, your interest rate could increase 2%. Citibank does not define what default means to them, but the lending industry usually defines a default as 90 days past due. So keep an eye on the fine print of their loan agreement. So let's summarize what we've seen from these two lenders. Both Citibank and Wells Fargo have a lot of green. They are both pretty good lenders. Of course, for many people, the most important two things are whether they can get the money that they need and if they can get it at the lowest possible price. In that case, the most important thing might be who will give you the best deal in your particular situation. That's why we always recommend that before you accept a loan, you should shop around. Find the best deal. You may not qualify for one, yet still qualify for an even better option. You just never know. At the Yukon Project, we've tried to make shopping around easy. If you visit our marketplace page, you can apply to any one of our featured lenders, and behind the scenes, we will check your rate with up to 40 other lenders. Our partners use a soft credit check, so applying won't hurt your credit score. We will show you all of the approved offers so that you can pick the loan that's best for you. If you have any questions about either one of these lenders that we didn't cover, leave a comment below and we'll try to answer it. If you found this video helpful, please like it and subscribe to our channel. Thanks for watching.